It's Monday, May 11th. I'm your host, Jason Moser. On today's financial show, we're going to dig into recent earnings reports from Square and PayPal. We're going to kick around a listener question about the state of the market today. As always, we've got a couple of stocks we're watching this coming week. Joining me, as always, certified financial planner, Matt Frankel. Matt, how's everything going?
Pretty good. The rare spring weather in South Carolina continues. Things are starting to open up a little bit down here. It's a pretty good day.
That's encouraging. Hopefully, hopefully that's a sign of things to come. I think spring weather is here in the sense that the pollen is all over the place. The temperatures are still kind of cool up here in Virginia, but it's actually kind of nice. I guess we needed to warm up a little bit, though.
Yeah, we had our pollen. You've seen it in South Carolina. Everything turns yellow. We had that happen a couple weeks ago, so we're pretty much past the pollen.
I think we're in the midst of that right now, so we're kind of just pushing through. But anyway, it was a big week last week for earnings season. Plenty of companies reported, but a couple of companies that you and I follow closely, a lot of listeners follow, a lot of listeners own these shares. Half the war on cash basket there in PayPal and Square reported. And the following day, the market certainly received those reports very, very well. Let's start with PayPal first, Matt. And I think PayPal actually had the better of the 2 days between the two. But, when I looked at this report, the report was strong. The conference call was really strong. I mean, the CEO, Dan Schulman, really framed this thing up in a way it's hard not to be optimistic about what they're doing and what the future holds for a company like PayPal. The one thing that stood out to me just in the report, strong quarterly results for the first quarter as usual, but this was a really interesting point here. The month of April alone, now that's their current quarter right now, in the second quarter. In the month of April, they added 7.4 million net new accounts. So that's around 250,000 per day. Now, for context, last year, for all of second quarter, they added 9 million net new accounts in all of the quarters. So you could see clearly there is a catalyst there that is getting people to sign up for PayPal and use their services more often. I mean, we obviously know what is contributing to that in many regards, but that was one of the statistics that stood out to me that just really it makes me happy as a shareholder, makes me feel like they're doing the right things.
Yeah, we mentioned a while ago that we thought companies like Square and PayPal are going to be part of the solution, and that really kind of puts that into perspective. I mean, you said year over year, but in January and February, they added 3 million new subscribers a month. So this is, double what they've been adding in a typical month this year, and more. So transaction volume was up 20% in April. It was transaction numbers both up 20%. So it looks like PayPal. I don't want to say beneficiary. I don't like using that term in context of the pandemic,
right?
Because no one wants to benefit from this.
Yeah.
This isn't a good situation by any stretch of the word. But for PayPal's business, this definitely could be a tailwind in terms of shifting more payments to online. We mentioned, cash is gross. No one wants to play with cash anymore. I mean, you've been saying that for years, but it seems like people are finally understanding that cash is kind of nasty.
Yeah, it is. I mean, I don't even remember the last time I got cash from when I went. Normally, when I go to the grocery store, I'll buy food, and then they'll give me the option to get some cash back when I swipe my card. And I don't remember the last time I even bothered to get cash back, to be honest with you. And it's just, I just don't need to use it, right? I mean, if you don't need to use it, then why bother? I don't know.
No, and that's what you're seeing now. People need to buy more things online, especially, so you're seeing PayPal accounts pop up all over the place. And there's just a lot of use cases for them. Like, a lot of people want to send their friends money who are hurting more than they are. Our fellow industry focus co-host Dan Klein has been, for just to kind of name one example of how PayPal is a really big use product right now. He's been doing these Saturday night concerts for musician friends of his who are out of work right now because they can't play anywhere. And the way they get their tips is through Venmo, PayPal, Cash App, things like that. So there's a whole lot more use cases than really meets the eye is the point of that story. And check out his concert if you want. I could tweet out details of his next concert. Definitely
Absolutely,
worth checking out.
We can get that out there on the industry focus feed. And I mean, to your point there about getting money to people, getting it from point A to point B. A few years back, PayPal made an acquisition of a company called Zoom. Now, this is not Zoom, the video communications company that we talk about today. This company was XOOM Zoom. And some listeners out there may recall I was a big fan of that business. I actually was able to get that into $1 Million Portfolio, a service we had here at the Motley Fool at the time. And I owned shares of it myself. They are in the business of financial remittance, and particularly outbound financial remittance from the United States to all of these different international locations, kind of like a Western Union for the 21st century. And I think PayPal saw something in that very early on and decided, you know what, these guys are doing something that we really like. It works right into our business model. So they went ahead and acquired Zoom and really bought it for what we all felt like was a steal at the time. In the call this past quarter, they noted that they saw with Zoom, they saw a 400% increase in people using Zoom, net new actives coming onto Zoom since January. So since the January-February timeframe. Now, I mean, that's really before a lot of the coronavirus concerns even started materializing. And certainly, again, I agree that we don't want to say beneficiary, but the fact of the matter is this point in time is going to result in companies coming out stronger than going in. But to see that Zoom has gained so much traction in such a short period of time, I mean, it is just mobile remittance, right? Instead of going to a physical location like you would have to do with a Western Union or something of that nature, Zoom just built this thing as a mobile solution, and it's really, really taken off, and it's starting to pay dividends for PayPal.
Yeah, I mean, like anything that is preventing people from leaving their house or it's not just getting cash out. It's people don't want to swipe their credit cards either. You don't want to touch anything that other people are touching. So PayPal is just kind of an all-around business that really facilitates that in a lot of different ways right now. And to be fair, a lot of their gains in the first quarter came from the Honey acquisition.
Yeah, that was about 10 million or 10.2 million users, I think they noted, that was a one-time benefit from that acquisition. But, I mean, when they make an acquisition like that, I mean, part of that is for that user base. I think it was less about, buying what Honey can do, although that is going to be a great part of the situation. But really, it was more about buying that network so they could plug all of their additional network users into that Honey product as well. I mean, you're talking about hundreds of millions of users.
The way I put it is it wasn't about buying 10 million users from Honey. It was exposing 325 million of PayPal's users to Honey's product.
Precisely.
And that's going to be a big tailwind going forward. And I mean, it's also worth noting that PayPal was still profitable this quarter. It wasn't just impressive growth, even after I mean, the quarter was pretty much normal, but all these financial companies are setting aside a lot of reserves in anticipation of losses. Even after that, PayPal earned a pretty respectable earnings per share, 66 cents per share. So PayPal was still pretty profitable even after setting aside a bunch of loss reserves.
Yeah, that was a 17-cent. They quantified that. It was a 17-cent impact from those credit loss reserves. And that makes sense, right? I mean, they have the PayPal credit products. You got to be careful with stuff like that. They work in conjunction with Synchrony Bank, so they have some support there. And looking at the balance sheet of the company, I mean, cash and short-term investments around $12.5 billion, total debt around $8 billion. I mean, clearly this is just a cash flow business. They make a lot of money, are doing a lot of great things. They have a huge network. I mean, it really does paint a picture of a company that has the world in front of it, which leads me to ask, I mean, what would you consider one of the challenges or red flags or something to look out for in regard to a company like PayPal? Or, I mean, is there one?
Oh, I mean, there's definitely red flags. I mean, obviously, it's a business that's dependent on consumers' willingness and ability to spend money. Whether or not they're using cash, if people don't have money, then PayPal's going to suffer. So right now, again, I don't want to use the word beneficiary, but the government's been doing such a great job of putting liquidity into the system that it really has a lot, for the most part. I mean, a lot of people are hurting, but for the most part, people's ability to spend really hasn't gone down. It's just their ability to go out and spend. So if we see the pandemic drag on for longer than the government is, the stimulus payments, the enhanced unemployment if the pandemic keeps going after the government support has run out, that could be a bad effect on
Yeah,
PayPal's
yeah. I
business.
mean, I feel like that could last a while, but it would still be temporary in nature. I mean, it's still at the end of the day.
Right. For the time being, July 31st is the key date because that's when those the $600 boost to unemployment benefits is set to run out then. So that's a key date to watch when you could potentially see consumers start running into a little bit more trouble if this is still dragging on. But I mean, the fact that a lot of the country is opening up at least somewhat is very encouraging. And I mean, I think there's minimal risk, but there's definitely a risk to
Yeah.
that happening.
Well, moving on from PayPal to another company that we both like, I think we both own. A lot of our listeners own. I know you're a big fan. Square also reported earnings, I believe, the same day, and yeah, after the market closed. Another strong quarter. It was interesting to see, the reaction initially from the market was a bit tepid, but the following day it opened up, and I mean, I think there was a lot of enthusiasm. And again, I see why Square not nearly as big as PayPal, but doing a lot of the same kinds of things that we saw from PayPal in its early days as well. I mean, that was another strong quarter. Revenue was up 44%, actually 51% if you exclude Caviar, which they recently sold off. But what stood out to you from Square's quarter, Matt?
Oh, it didn't stand out. I mean, it was a pretty solid quarter all around.
Yeah.
I mean, let me collect my bearings here. I have like 10 things on my punch
Take
list.
a deep breath.
Well, and some were good, some were not. Just to I'll get some of the bad out of the way first. Unlike PayPal, that was still profitable after setting some reserves aside, Square was not. They posted a loss of 106 million in the first quarter after setting aside some loss reserves. So there's that. And to be fair, Square is a lot more loan exposed than PayPal. Like you mentioned, PayPal's loans are pretty much made through Synchrony,
Yeah.
whereas Square Capital makes its own loans. Square is a participant in the PPP program, the Paycheck Protection Program.
Yep.
So that's kind of a new thing that's going on. And just some of the numbers in April were really impressive. Cash App direct deposit volume tripled in April month over month. Most of that was the stimulus checks, but it's getting people into the ecosystem and getting money into the ecosystem that creates more transaction volume.
Oh, sure. I mean, once you experience the seamlessness of that experience once, I mean, then I think really all it takes is one or two of those experiences, and you're hooked. I mean, then you realize why am I doing this why am I doing this the hard way when there are easy solutions like the Cash App out there?
Right, and that's on top of in the first quarter, the Cash App had the gross profit more than doubled year over year in the first quarter. So Cash App could be a force to be reckoned with going forward.
Yeah.
And one of the things that really stood out to me, in addition to the Cash App, was the Square Online Store initiative. That's really, really small at the moment. And you asked what PayPal needs to be worried about, and if this gets big, it could be something that could eat into PayPal's revenue. Square has a platform that essentially lets sellers design and build an online store in less than a day. It's really a seamless app.
And that's what that Weebly acquisition
and-
was really all about, right?
Yeah, this came from the Weebly acquisition. And what they saw when things started shutting down and you couldn't go inside stores anymore, that payment volume through the online store shot up. It quintupled. It quintupled in just a couple weeks since launching curbside pickup options and things like that. So, again, don't want to use the word beneficiary, but Cash App and Square's online store are two things that really could gain some traction here. Online store is one really to watch because it's really new. It even after I said it quintupled since they launched curbside, it's still at roughly $50 million of payment volume, and Square's payment volume's in the about $100 billion per year. So still a very drop in the bucket. I could see it getting a whole lot bigger over time.
Yeah, I mean that's similar to, it's kind of like their answer. They're trying to become a little bit more like Shopify in that regard. And you see Shopify trying to become a little bit more like Square on the payment side. And I think we've talked about this before. It's not really having to choose one or the other. When you look at both of these businesses, and you can see they're all doing really neat stuff, and they're participating in a huge market. I mean, when you look even further out at these companies like Visa and MasterCard, and they're talking about these $185 trillion opportunities of just money flowing around the world. I mean, it really it's mind bending how much money you're talking about. And really, it's not about one company winning this market. It's about companies providing excellent solutions and taking part in it. And Square just happens to be one of them.
Right. I mean, like you said, they're kind of trying to be a little like Shopify. They're kind of trying to be a little like PayPal and moving away from their traditional brick and
Yeah.
mortar business. I think this whole pandemic could kind of accelerate their plans
Yep.
to do that. Because right now they're reliant on people being able to go to stores, and that hasn't
That
really been the
hasn't.
case.
Nope.
I mean, the Cash App certainly helps, but as far as their core payment processing business, it's pretty much an in-store, payment system. They don't have that much of an online presence
No,
yet.
and I noticed for Square in April they were talking about that total payment volume or that gross payment volume that went through the system. I mean, they processed 25.7 billion in gross payment volume in the quarter. That was up 14% from a year ago. But if you look at what's gone on in April, they said April's seller gross payment volume was down 39% over the same quarter a year ago. And they've seen some improvement in, I'm sure that has something to do with states trying to get up and running a little bit, but it also has a lot to do with Square rolling out all of these different features for that online store as more and more
Yeah,
sellers move online.
and that's kind of like the brick and mortar kind of the stark differentiation from PayPal. We just talked about their transaction volume was up
Yeah,
20% in April, whereas Square's was down 39%. And that's kind of the why you don't want to rely so much on brick and mortar in times
no,
like this. And I mean, this is an extreme example. It's not like you're going to get a pandemic. We don't get a pandemic like this every few
true.
years. But I mean, hopefully, knock on
Yeah,
wood, it's not going to
yeah,
happen. But it's there's a lot of things that really can disrupt brick and mortar payments that don't really affect online. Like a major hurricane goes through the southern U.S. People need to shop online. Stores were closed for a while. I mean, when I lived in the Florida Keys, there was one of the storms when retailers were closed for 2 weeks, and we really didn't even get anything major. So I mean, but online, like I could still buy whatever I wanted to on Amazon.
that's very true.
So there's a lot that can really disrupt brick and mortar payments, and I mean, not to mention retail bankruptcies and things like that
Yeah.
that we've seen. So I could see Square focusing a lot on that going forward, and I'm sure someone at Square was kind of jealous of PayPal's numbers for April.
PayPal envy, it's a thing, huh?
I mean, I would have been if I was Square's CFO or something. I would have looked at PayPal's numbers and maybe tried to realign my short-term
Yeah, well, I tell
priorities.
you, I mean, after listening to that PayPal call, it really struck me. I mean, it felt like they just won earnings season with that release and that call. It was just so good in so many ways. So
Yeah, I would agree with that. And like we said, Squares wasn't bad at all. Both stocks were well up, or were handily
yeah,
up after that.
yeah. I mean,
So
I think very much the long term picture is still very much in play. The long term thesis there is still very much in play. Just liking the move towards less cash, more electronic transactions, and liking the investments that these businesses are making in all sorts of different ways to facilitate that movement. So. Yeah, we'll keep an eye on any red flags that come out. But for now, I remain a happy shareholder of both companies. Okay, Matt. Last week we got a question in from a listener, a friend of the show, Milo McMahon, had sent in a little video question for us, asking us how we were viewing the market in this state of what seems like irrational exuberance today.
Hey Jason, how you doing, buddy? Milo here. I just had a quick question for you. We've just obviously gone through a completely unprecedented period of economic turmoil, millions of businesses all over the world having to shut down. And yet, as we look at what's happening in the market now, we're seeing prices creeping up, in some cases almost back to where they were or even above that. I'm wondering, as a foolish investor, we are not interested in trying to time the market or anticipate what's going to happen in the short term. But what kinds of things should we be thinking about when we see what essentially appears to amount to irrational exuberance in the market? I'm wondering what kind of things you're thinking about in terms of raising cash or trimming certain positions, because, for every Shopify or PayPal out there, there's probably 10,000 small businesses who have had the exact opposite happen. They haven't grown. They're teetering on collapse. And I just don't see how we can't. I don't see a situation where we wouldn't see the ripple effects play out on earnings. So I'm just wondering your thoughts on that. How should investors be thinking about periods like this where it seems abundantly clear that there's irrational exuberance happening in the market. Thanks a lot. I really appreciate it, and I hope you're keeping well.
I thought this was a really good question for a lot of reasons. It made me think about this decoupling of sorts that we're seeing. I mean, the economic picture on the ground obviously is extremely challenging. I mean, unemployment numbers have clocked in at 15%. There's talk of it going to 20%. You hear people throwing around the words Great Depression. I think that's probably a little bit of an overreaction. I mean, I think when you look at what caused the Great Depression, I mean, these are two very different points in time. And I think ultimately there is a finish line here in regard to the pandemic and COVID-19. But, I mean, it was a very fair question. And I wanted to get your point of view. How do you view the conditions in the market today? Do you feel like it's irrational exuberance, or do you feel like some of it's justified?
I feel like some of the moves have been irrational, but I don't feel like anything's too expensive right now. In other words, the way to kind of explain it is that the stock market is a forward indicator when it comes to the economy. It's not based on what's going on right now. Obviously, if it were, I mean, unemployment spiking, the stock market would be collapsing right now. The stock market is kind of derives its value from the expected results of businesses going forward or over, infinity years from now. So as things happen, that picture gets better. On the economic side, when the day the market bottomed was the day the Fed passed the day Congress passed the CARES Act, the big stimulus package. So that changed the picture. There was going to be more money in the economy. When they approved the drug they just approved, remdesivir.
Yeah, remdesivir.
Don't laugh at me if I just said that wrong.
Can't ever pronounce any of them right, man. There's all funky names.
But when the news came out that was actually helping coronavirus patients, then the market went up, and rightfully so, because the future projection changed. So it's not necessary. And nobody has a crystal ball is kind of the point. All that investors can do is kind of make their best guess to where the future is headed. And the future right now looks a lot better than it did on March the 18th.
It does. I think that's a really good point. It felt like the entire month of March was just one long nightmare of bad news. And you could not get away from it.
Right. And the present doesn't look very good. Obviously, if you just took a snapshot of the U.S. economy and told somebody randomly that the market was up 30% from the lows, they would ask you why.
Yeah, I mean, to that point, though, we're kind of in like a little bit of a twilight zone right now. I mean, we've not gotten back to the levels where we were at the time that the bear market started, right? Not even close. I mean, that was the fastest trip into bear market territory ever.
Right. I think the Dow is somewhere around in the 24,000 ballpark right now.
It was closing in on 30 last.
Yeah, it was closing in. People were already having Dow 30,000 hats made on the New York Stock Exchange.
I mean, that's a very good point, I think. I mean, it is for as much enthusiasm as it feels like there is today, it still isn't even close to where we were when everything fell, right? When the bottom fell out. So, I mean, that is a really good point there. We fell so far so fast that any kind of bounce back almost feels like irrational exuberance to a degree. But yeah, I mean, that's a good point. We're not even close to the highs where we were before the bottom fell out.
And I will say the last time the market peaked was the day that I was up there talking to Jason in person. So there may be something to that. We need to make a trip to Fool HQ and just meet you at the office, and the market will be, it'll react positively to that development.
I like that thinking. I was thinking about this over the weekend too, and there was a quote from Microsoft's earnings call. I guess it was last week, but CEO Satya Nadella said in the call, he said, "We've seen 2 years worth of digital transformation in 2 months." And he's right. I mean, we're seeing it even at the Motley Fool. I mean, we had to close down Fool HQ. I guess it's been a couple of months ago, and we were quick to pivot into introducing all sorts of technology that we've tampered with, technology that we've used, but we essentially took that technology and we made it our entire workflow. So whether it's Zoom video communications or whether it's Slack or whether it's Microsoft or Google, I mean, we're getting all of the work done. It's just in a different way now, and it struck me that he was right. This digital transformation was really pulled forward. It's not that digital transformation wasn't happening; it was, but this really hastened the process. And I think in the process, it's shown a light on the companies that are leading the way in this regard. And it's not just in any one vertical, right? I mean, we talked about Zoom and Slack and Microsoft, companies like that, but look at companies like DocuSign or PayPal and Square or even Teladoc Health. All of a sudden now people are starting to get it a little bit more. I mean, even esports, for example, now that the entire sporting world is ground to a halt. I mean, you're seeing all sorts of different things coming to the forefront now that there were signs that they were coming to the forefront, but this really hastened the process. And so it's one thing to look at the greater market and understand that there are plenty of companies out there that are really suffering. But within that market, within that group, I mean, there are some companies that are really, really shining, and I think a lot of that just has to do with this digital transformation that they're leading.
One of the big questions I have is how much of that shift is going to be permanent. Like, for example, after 9/11, people were saying no one's going to fly again, and all business is going to take place over the phone and things to that effect. So one of my big questions is how much of that is a permanent shift? Because yes, esports is getting a big bump right now, but people aren't going to stop going to football games. People aren't going to necessarily stop going on vacation and staying in hotels. People who are saying that virtual meetings are going to completely take the place of in-person business are the same people who tell you that K-cups are going to replace going to Starbucks. Like, it's just not a fair comparison. It's not a permanent. Yes, it took. I'm sure a lot of people, instead of going to Starbucks, are making a K-cup or two, but it didn't replace it by any means. So it'll be kind of curious to see the dynamics when things snap back to, how much of the video conferencing is permanent, how much of the using PayPal or Venmo instead of using credit cards in a store is going to be permanent. So it's going to be some interesting dynamics. But like I said, the future economy looks a lot rosier than it did a couple months ago.
Yeah, I think that's a good point. And Milo, thanks for the question. I hope that was helpful. Okay, Matt, before we wrap it up here, let's jump into the ones to watch. We got stocks we're watching this coming week. What is your one to watch, Matt?
Well, I think neither of us are going to mention any financial stocks right now. Not on purpose. There are some good deals there, but I'm looking at Disney right now. And I'll tell you why. I recently bought Disney in my kids' accounts for the first time. I had been wanting to buy it forever, and it finally had some good opportunities in recent weeks. We all know why Disney is the stock's down. The parks are closed, the cruise ships are docked. But there's also some reasons to be positive. One, they have tons of liquidity. They raised another $7 billion in debt, $5 billion on their credit line. They suspended their dividend. They have plenty of money to make it through to the other side. That's number one. Number two, they just reopened Shanghai Disney, their biggest one in Asia. And if that demands any indicator, then people are not going to be afraid to go to Disney World and Disneyland when we reopen. The brand value of Disney is kind of unmatched. They're almost to their 2024 projection for Disney Plus, and the service launched 6 months ago. So they hit 54.5 million users. They said they were on track. They wanted to do 60 million by 2024.
Yeah, I'd say they got that. I'd say they got that.
Yeah, they're probably going to get that this year. So I think there's a lot to like about Disney, especially at these levels. Disney is not a stock you buy for the short term. That's something you buy and hold for a long time. So if you have some money that you want to just buy something and leave it alone for a while, Disney is what.
That's a good one. That's a good one. Yep. I mean, this pandemic is going to be temporary, but when it's all said and done, Disney's still going to be awesome. So that's a good thing to keep in mind. So I'm actually going to be keeping an eye on Sony and the ticker on this market here, SNE. And Sony is a little bit of a financials company, believe it or not. That's not why I'm watching it, but really, I mean, they are making all sorts of investments in immersive technology, from AR visors to VR gaming experiences with the PlayStation, and they're helping customers build out solutions for industrial AR uses today. So I'm very fascinated by the immersive technology angle. But it's also a very well diversified business. Around 35% of their operating profit comes from gaming with the PlayStation platform. But as I mentioned, there is a financials to this financials dynamic to this business. Now, it's mostly insurance, and I think most, if not all, of that takes place in its home market of Japan. But it's around 14% of revenue, interestingly enough. So just kind of interesting to think of Sony as a financials company in some capacity. But the stock, it's not one that's on our radar very often, I think, in our foolish universe for whatever reason, but it's one that's been on my radar for a while now. And if you look back over time, it's actually performed quite well, and I think there are a lot of reasons for that. It's just a very well diversified company that does a lot of different things. And as technology continues to evolve, it seems like Sony is playing a big role in that. So earnings are out on Wednesday. Going to be digging into that to see what the rest of the year looks like for them. But Matt, I think that's going to do it for us this week. Appreciate you taking the time.
Of course. Hopefully things will start to get back to normal gradually as we go over the next few months. I'm kind of curious to see how this
Fingers
plays out.
crossed. Fingers crossed. And remember, everybody, you can always reach out to us on Twitter at MF Industry Focus, or you can drop us an email at industryfocus@fool.com. Let us know how things are going. Ask us questions. Tell us about stocks that you're buying. We're always interested to hear. As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. Thanks as always to our man Alston Morgan for making the magic happen. For Matt Frankel, I'm Jason Moser. Thanks for listening, and we'll see you next week.